Welcome back to another episode of Confident Real Estate. I'm your host, JC. Today we're going to talk about how to make money and keep that money and grow that money. If you like making money, you should probably hit like on this video because you're going to like what we have to talk about. And if you like growing your money, then you absolutely need to hit subscribe and become a member of this Confident Real Estate family that keeps growing. We're giving out some great advice here. So, let's get into today's topic, how to make money and, more importantly, the harder task, keep your money and grow your money. There's only three ways to actually make money. You can become an employee for somebody else, you can sell a service, or you can sell a product. Making money is actually significantly easier than keeping your money and growing your money. Why is that? It's about money mindset. Did you know that on average, less than 10% of the money an average person will make in their lifetime is put into their savings? Think about that. Of all the money that most people make in their life, they put away less than 10% of it into savings and investments. That's scary. That is a lot of money that has been spent on necessities, but also things that are not necessities. Imagine if they had put that money to a better use. It's all about money mindset. And that money mindset difference is the difference between people who can easily keep and grow their money exponentially and people who struggle just to hold on to the money that they make every week. It's important to remember that money is always losing value. Think about that. If you have $1 million today, that's pretty cool, right? But if you had $1 million back in 1933, you were practically the equivalent of a billionaire today. Much cooler. It's not as impressive to have $1 million today. It's still awesome, but it's not like it would have been in 1933 when nobody had $1 million. The point is, money is losing value every year. It's due to inflation. Inflation conservatively is 2.5% to 3% per year. So every year, that $1 million, if you do nothing with it, is losing value by 2.5% to 3%. It's worth less next year than it is today. But most Americans take the money they make and instead of doing something smart with it, like we'll touch on in a second, they have the mindset that they want to look rich and be flashy and show the world the excesses of their hard work. So they go out and they buy depreciating assets like fancy cars and handbags and shoes and sneakers, right? So their money's already losing 2.5% to 3% on average every year in value. But on top of that, they're taking the money and spending it on things that lose value even quicker than that. That's where money mindset comes into play, because wealthy people, they don't do that. They buy assets that appreciate every year in value. So if money is losing value at 2.5% to 3% per year, they could take that $1 million and invest in a piece of real estate that's maybe going to give them a 6 or 7% return. They're already more than doubling the increase of what their money is losing in value due to inflation. They're not then spending the money on flashy things that depreciate even quicker than the loss value factor of inflation. Am I making sense? Think of it this way. If I gave you $1 million and you put it into index funds and a couple of pieces of real estate, small commercial properties and some index funds today, in 30 years, you would have tremendously more than $1 million. It would compound with interest. Rents on your properties would go up every year while your tenants paid down your mortgage debt on those properties. The capital appreciation and value of those properties would go up every year at some level, depending on the type of property you bought and where you buy, things we covered on this channel. So click subscribe if you're not yet a member. But the point is, your index funds, your real estate assets, they are growing every year without you even touching them. So if you put that money into a car, in 10 years, is that car still going to drive as well as it does on day one? No, it's probably going to have to get replaced. In the meantime, if you put that money into assets, you are making money. It's about building a machine that will take care of you. Don't be the machine that just keeps having to go out there and make money. Build a machine that makes money for you. Every single one of your dollars is an employee. At the end of the year, if you're putting out a significant portion of your dollars into the marketplace in assets that will appreciate in value and deliver you returns, those are employees. Think of them that way. Each dollar should be coming back to you at the end of the year with 5 to 10 cents minimum to hand you back. That's a 5 to 10% return on your money. More than double the inflation loss that your money would otherwise be subject to. The most important piece of this whole equation is you taking action. You have to take action. If you don't, you can't build your portfolio, that machine that we just talked about that's going to pay you for the rest of your life. You have to put some time in to actually go find assets, evaluate them, save up your money, and invest it in those assets that you've located. It might be a little bit of trial and error, and not every investment's going to be a home run, but that's okay. You just need singles and doubles on a regular basis. If you spend the time to build that portfolio, it will take care of you and your future generations, your kids, your grandkids, potentially, for generations to come, because you put in the legwork now. Think about the fact that if you're already an employee and you come home tired every day and you think, God, now I got to put in time to go build this machine that's going to take care of me, my portfolio. Well, guess what you spent all day doing? You traded your time for a paycheck to continue building your employer's dream, your employer's machine that's taking care of your employer right now and will continue to grow and take care of them for a lifetime. I'm sure they're taking the money that you're making them by continuing to keep their business thriving, and they're diversifying and investing in things like real estate and index funds and stocks, all things that you're talking about but maybe not doing. You have to take action if you ever want to see your dreams come to fruition. It's just the hard truth of it. Before you beat yourself up, just consider the fact that if you've watched this video all the way to the end, you already know what you want out of life. You want better. You are investing your free time, not in front of a television, watching a sitcom, having a cold one. You are actually investing your time to motivate yourself and learn some new things to expand your knowledge base in order to go out and build that portfolio, that machine that will take care of you forever. And for that, I applaud you, because a lot of people, most people, don't even do that much. Just keep the momentum going. And I really do encourage you to hit subscribe on this channel, because what we're covering here is the type of topics we cover in almost every video we put out there. Motivational investing with an obvious focus on commercial real estate and real estate investing, because that's my background. That's what I invest in. But I do invest in stocks and index funds. I option trade, believe it or not, on a daily basis. And I'm a real estate attorney and investor for years. Over a decade I've been doing this. So I hope you consider becoming part of this Confident Real Estate family. If there's anything you want to see me cover, leave it down in the comments. Smash like on this video, smash subscribe if you didn't do it yet. And I appreciate that you watched this all the way to the end, because I value your free time as much as your employer values the time you give them. Invest in yourself. Until next time.